Well, a couple of these banks they're losing. We have Syndicate Bank as well as a lot of these financials, Repco Home, LIC, Housing Finance and Motherson Sumi as well actually at the lows of the day. So we're seeing some bit of a decline in the mid-cap index, underperforming the frontline space. Remember the Nifty down about 40 points, the Sensex about 100 points. But the stock on our radar, Reliance, holding up in the green after reporting its third quarter earnings. Refining business was the one which was a surprise. Geo as well as the retail business too did well. To help us decode the numbers further, we have Jal Irani, the Senior VP Wholesale Capital Market at Edelweiss joining us now. Jal, your first thoughts on Reliance results and what does one do with the stock?
So I think certainly the refining business didn't do as badly as one would have thought. And they managed actually to hedge both the products and crude prices quite well. Also, the last quarter was they had a shutdown, so there was a low base effect. So that certainly did well. But I think the central theme is that Reliance achieved a higher operational leverage across businesses. So essentially, its production was higher across businesses, and its fixed cost to that extent didn't go up. So it got a fair amount of operational leverage. So especially if you look at the petrochemical business, which in fact was the star performer, and that had as large a surge in profits as all the other divisions put together. The new petchem cracker that they have commissioned essentially resulted in was at 106% utilization. They drove that at. Also, the ethane imports from the U.S., which is a very profitable facility, basically they're running flat out. Similarly, in the retail business also, their like-for-like volume growth was 20%, which resulted in core EBITDA going up from 6.1 to I think 7.2 odd %.
Okay.
And finally, of course, having said that, while the results are good, there is other income also doubled, partially on the back of sale of some treasury and securities. So there's of course a significant element of other income being there as well.
All right, Jal, in terms of the GRMs, I was looking at various reports. They're expecting a big jump from here. What's your estimate for FY20? In the past quarter, we have a reading of sub $9. So,
see, firstly, January actually has started off on a very bad note. And in fact, gasoline, which was the culprit last quarter, gasoline crack spreads, in fact, briefly have even dipped to $0 per barrel. Normalized would be in the region of about, say, $13, $16 a barrel. So near-term things actually, and also one of the major refinery units is already in major shutdown right now. So I don't believe that you are going to see any form of a significant recovery in this quarter. However, having said that, with the approaching global tighter sulfur emission norms for bunker fuel for ships, that into the next year should see refining margins strengthening, in our opinion, by at least $2 a barrel.
So your expectations are around $10 per barrel next year?
Well, I'll have to look up my formal forecast if you give me a second. But
$2 would be around what? Around
it's $11.5.
$11.5 approximately. That's for FY20, right?
That's for FY20, correct.
All right, Jal, and since we have you with us, how does one approach the oil and gas space right now, and what is your pecking order? OMCs, what would you say?
I would like to stick to Reliance, but yeah, I mean, why don't we stick to Reliance?
All right, fine. Thanks a lot for that.
Thank you,
that was Jal Irani giving his views as far as Reliance is concerned. But as we speak about Reliance, of course, the standard disclaimer that Reliance Industries owns Network 18 and TV 18, the companies which operate the channel that you are currently watching. But let's move on. At CNBC TV 18, IBLA Awards, Nigel?
Yeah, man. Well, late last evening, the Finance Minister Arun Jaitley set the cat among the pigeons by giving big hints on the imminent farm package, unconventional ideas to meet the economic challenges, as well as the fact that the budget may go beyond the vote on account.
Fiscal prudence and fiscal discipline is something which gets rewarded in the larger interest of the economy. Of course, there could be unusual situations where you will have to fill the gaps in certain areas and you will have to increase the expenditure. But so far, we are now very close to completing 5 years of our first tenure, and we've stuck to that line. Now, when governments in the past have not stuck to it, we've seen the consequences of this on currency, the consequences of this on inflation, the consequences of this on investment, on the ratings, as also. And therefore, when we came to power, we inherited a fiscal deficit of about 4.5, 4.6%. Last year was an unusual situation where we had the GST revenue only for 11 months. And we had to really make the expenditure for the full 12 months. And therefore, from 3.5, I intended coming down to 3.3 last year itself. But because of a 1 month absence of a tax revenue of the GST, we couldn't afford to do that. So that was an exceptional situation, which I'm sure the markets also understand. And therefore, I certainly do understand the importance. And of course, deviations are possible only if extraordinary circumstances exist. And those are extraordinary circumstances which for analysts, for global players, for domestic players are relatively easier to understand. Whether it's a situation like a natural calamity, or it's a situation like a drought, for instance, or it's a situation like a stress in a particular sector. Now, these are all areas which can't be considered any form of populist expenditure. Now, markets will never understand if you just act for the sake of populism, but if it is a larger interest because of a compelling situation that develops, I think that's a rational, logical thing which markets will also tend to understand. It entirely depends on what the existing situations are. And if we look at the big picture, there have been successes that we've seen in the last few years. There have also been challenges. And therefore, without getting into the specifics, because that would really be disclosing the mind into which we are working, some of those challenges really can't afford to wait. And therefore, obviously, there would be a necessity to address some of them. It's happened in the past, and therefore, we intend working within the parameters of the conventions as they exist.
All right, so those were some comments coming in from the Finance Minister at our India Business Leader Awards that took place yesterday.